Hey everyone, John Henry here, Slingshot Futures Trading Group, SSFTG. Welcome to the video. In this one, if you couldn't tell by the way that it was laid out, we are going to be going over the 5-minute psychological aspect, candle by candle, looking at what is going on from start to, for the most of the morning session here on the S&P from a 5-minute chart basis. So as far as the overall movement is concerned, starting off with the very first candle, we open up with an inside gap up. Now, inside gap is very, very close. It was almost not an inside gap up, but it was an inside gap to the upside. And starting off the day with a relatively strong bear bar to kind of push things off. Now, if we look backward a little bit here, we can see that, well, inside of that sort of this pop higher, we had this little spike in channel that was forming before, and then we had a bit more kind of continuation with a little bit of a descending wedge. Those all broke higher, and now the market is rotating back into that initial structure. So the fact that it gapped above it and then failed right back down inside of it, it's a little bit of a concern, right? That's a tough one. That makes it a little bit more difficult. If we look at the first 5-minute volume and kind of see what's going on for this first little 5 portion, we've got the initial volume, which stacked up at around 4,400 rather, 25. And that is, we're demonstrating that the sellers are trying to get movement back down. Settlement prices are a little bit further down, and if we look at the previous inside high, they've still got some room to go. It's a bit of a concern, but realistically, the previous swing high, noting where we're coming from, doesn't necessarily make sense to stop it from happening. This is the first candle of the day, so as far as any type of movement is concerned, anything outside of a swing trade, a 2-to-1 type reward versus risk, is just not going to fit. The first candle of the day is incredibly difficult, but there will be traders who are shorting this move, looking for a move back down to settlement, just to see if they can finish the job. Now, as we continue further, we have, okay, nice little bear bar to the downside, an actual candle gapping from close to open of the next bar. As far as the continuation down goes, that was a really big bear bar lower, but now we have a massively bottom-weighted POC that's beginning to shift to the downside as we begin migrating into some of this previous structure. Now, it's very early to say that this is possibly the low or anything like that, but the fact that we're seeing volume build in so aggressively on the way down would make sense that at the very least, sellers are taking profits, so much so that we're kind of separating away and demonstrating new, larger volume nodes right now at 43.91. At the moment, with this big bear movement to the downside, assuming that we open up another candle right where this candle closes, that's going to give us some downside gapping to the next candle, which might suggest at least movement down to like the 77 quarters. But we know really what's kind of on the mind of things here. We're seeing the POC shift to the downside. Settlement's not too far away. We're probably going to see a push down towards that settlement area, which would make the most sense. As far as sellers to the downside, if they are looking for that break underneath, the scalp objective has been filled. The 2-to-1 still has quite a ways to go. That would be down at the lows at around 81.50. We continue a little bit further down, 3 strong bear bars, and we do have candle gapping to the downside. That candle gapping would suggest that sellers are going to get a little bit more momentum lower. Let's go a bit further as far as volume is concerned. And as far as the candle gapping, if we look for a 1-to-1 move, that would give us a downside objective of 78.50. So it's looking okay, like the sellers have a shot to try to take this lower. We're underneath the POC. That's definitely going to keep things as a challenge. And a lot of times we're going to see sellers start trying to pressure back off of this, now that we're closing underneath the POC, to look to push back down. So if we can get a little inside pullback back above this bear bar's high to try to finish the move, it makes a lot of sense from a scalper's perspective because they can sell at that POC with a stop above that previous high, and a scalper's target is still inside of the gap fill. So there will be a shot for sellers to try to get at least a little bit of something going on here to the downside if we can break above that previous POC. We get a little bit more momentum to the downside and another bear bar. There's no candle gapping. In fact, all of the gapping is closed. You can see it went through there. As far as the downside objective goes, still wide open from the candle gap perspective, but nothing else really changing. We're getting closer and closer and closer to the settlement price, but it's not reaching out and getting that job done. As far as the volume is concerned, let's creep it a little further forward. We've got another move to the downside. So here again, we're closing underneath this POC, which continues to move lower. This would more suggest that if the sellers did sell the open, they're taking profit into the downsided move. Realistically, this looks like it's about a 1-to-1 move, right? If we put the 1-to-1 on here. Yeah, we're hovering around the 1-to-1 target. So there are a lot of people that are taking profit ahead of settlement. It makes sense. Downside objective still looking for a bit more. But, again, if we do get a little bit of a pop higher, sellers will be looking to sell into that move with at least a scalper's objective back to the downside. And that would be the mentality of trying to fill that settlement. It's still open. We've got a string of 4 bear bars back to back. It's very unlikely that we don't see at least an attempt more to the downside, even if the market does pause. Nice little pop to the upside here, and we do retest the previous high of that bear bar. That's where you expect to see sellers coming in. That's the bottom of the gap. I mean, everything is stacked up inside there. Sellers obviously respond, and more, they closed underneath that previous POC, but let's see if it changed. Creep it further forward. The POC, yeah, they still close underneath the POC. So as far as the bulls taking over, it's not exactly sticking the landing. Downside objective still wide open. If sellers did sell above the previous high, they're going to be looking for a continuation back down towards that settlement price. But for all things, all things considered, it's still looking pretty strong to the downside. And if the bulls are going to take over, well, they've got some proving to do. Okay, nice bull bar to the upside. They're beginning to fill in the gap, which has not been filled yet. This means that this downside objective now moves in just a little bit to right there at 43.80.50 as far as the candle gap from earlier. The bull bar to the upside here, I mean, again, we just had the market try to go up and reject all the way back down. If we creep this a little bit further forward, that POC is still down here and the market is now closing above. Maybe the bulls are trying to come in here, but we still have bear gapping to the downside. We still have a reason to believe that the sellers are trying to get something going, and there's still settlement, there's still gap targets, there's still every reason to believe that we're going to get at least another attempt to the downside still. So as far as the sellers are concerned, they're going to continue selling into this move, looking for a rotation down, but breaking above the POC and seeing how this is forming inside of here. Also noting that we had some minor candle gapping from close to open on that bull bar, which was up. We also had candle gapping, which was up. Those little minute details giving us some clues that something might be up. We're in some troubled water. I still like the short side. It still makes more sense for the sellers to come down, but there's something going on. It's acting a bit funky. A nice bear bar, very nice bear bar. Now, as far as the candle gap is concerned, that does move it in just a little bit further still. That means downside objectives are still below settlement, but that would be at around 43.82. As far as the movement is concerned, if we move this further up with the volume, we have the volume shifting back up again. So this makes perfect sense. Sellers are trying to get this to rotate back to the downside. From a scalper's perspective, we know that their targets are actually inside the new lows, even at 85.50. It doesn't even have to go to settlement. So a lot of traders are looking for that downsided move. And again, if they were selling here, stops above this, they're looking for scalper objectives back towards like the 87 quarters. Potentially a little bit further, way out here, I guess, but I mean, in terms of gaining the highest probability, just putting it above that previous big old bear bar, if they go above that, they'd be closing in the gap. It wouldn't make sense for them to have to measure that far out. So here, the target objective for scalpers is ahead of the lows at around 87 quarter. We've got a very nice bear bar to get the job done, and sellers will probably even potentially re-up underneath that for another drive down. So there's a lot of reasons to believe that we're probably going to get a bit more continuation to the downside here, and it's lining up nicely with filling in that settlement. Now, they trigger in the sellers underneath this candle, and notice where they close. We know there are a lot of sellers who are selling up here on that previous, like we were talking about. But as far as selling underneath this bear bar, they trigger them in and immediately close above. That's going to freak a lot of scalpers out. So a lot of traders, they're going to move their stops above the high of that bull bar. They're going to look to potentially try to exit a break even if it drives down. Maybe even modify their scalpers' objectives based on actual risk. And that puts their target in the same spot as the other one. So once again, they don't necessarily have to go all the way down to a new low because, well, all of the targets are ahead of the lows. Very nice bear bar to the downside, and notice where that bear bar closed. What a clue. Huge clue that the sellers are potentially taking some profit into that move. A lot of sellers taking profit into that move, stopping it from closing. Now, we do have the POC back at 43.90. We've kind of left that behind, and we're closing underneath it. Very strong inclination that the sellers are going to try to continue this back to the downside. The bulls just tried coming in. Now we're getting a nice bear bar down. All sellers need is another trigger underneath the bear bar, get this thing dropping underneath, take out all the stops underneath the bottom, we're good to go, and then we'll probably get the settlement and the extended targets to the downside. Oh, okay, well that wasn't it. So if the sellers were looking for a continuation down, they were immediately shut down. And they were shut down in a big way. This is closing in the candle gap, all in one big bar, right back above the POC. This is some serious problem. If shorts were short and they didn't take their profit to the downside, very likely they're going to start jumping ship on this. It would be fantastic to see a pullback at 43.90, but the way that this showed up, I mean, that might just not be feasible. You know, this could very easily form a new candle gap in the opposite direction. That's a huge bull bar. So a lot of buyers, knowing that, will just say, you know what? I don't know if I'm going to get a pullback. Maybe I do, maybe I don't. I'm just going to buy as soon as it goes above this bull bar's high and accept the fact that I'm going to have to risk a lot. If I'm going to have to risk a lot, then I'm probably going to be a scalper. So my upside objective would be back up in towards the 98s. And that fits really nicely with filling in some of this previous funky candle gap from close to open. So there is a nice magnet for the longs to try to draw the market up. And it's very likely not going to pull back that much because of how aggressively that turned higher. More continuation up. They were able to close directly on top of the entry point for a lot of bulls. The POC still way down there, and as expected, very little pullback. Bulls still looking for more continuation. It hasn't really done a whole lot. I mean, I suppose an actual risk target as a 2-to-1 would put a target basically right where the scalp target is anyway, but would put it at around 98.75. So, I mean, there are a few different ways to look at it, but realistically, they're all right around the same area, upside objective wise. More continuation back up, tags that 187.50 mark, or sorry, that's dollars and cents, at 43.98. Let me get the actual prices there, and rejects immediately off of the top of that. Big concept that gap has been attempted, and, well, they got filled. They filled the gap, the targets have been met, we're starting to reject back off. Now, we know that the next objective higher here is still a little bit open. There's no candle gapping suggesting that the market needs to continue higher. But realistically, the way that this is moving, as long as we don't see anything funky in the volume, there's every expectation in the world to see this thing going further up. These objectives make sense, but, you know, seeing a little bit more momentum higher, challenging inside the 5-minute bar, maybe back to the open. 44.01, maybe back to a new high and we just go range bound, but a little bit more still makes sense. Very nice bull bar to the upside. Now they're breaking through the scalper's objectives, and as far as the scalper's objectives breaking through like this, a lot of traders are obviously going to be taking profit, but along with this needs to, I mean, look at the amount of momentum that we have up. It's a string, again, of 4 or 5 bull bars to the upside. The same thing happened over here to the downside. It's very likely that any pullback at this point is going to see another attempt back up. Now, when that pullback happens, we don't know yet, but at least right now, without any candle gapping or anything like that, and in fact, the only other candle gap that happened was negative, a little bit awkward, it might be more beneficial to see a deeper pullback. We're not seeing anything that's necessarily saying, hey, this thing has to keep going, and the only candle gap we have is this, which has already been filled. So, again, we're really far up here. Do I want to be a buyer way up here now, knowing that all the buyers have already taken their objectives off? No, if I were already long, let it go long. But if you're not, I'm not looking to buy way the heck up here anymore. It's a little too far away. Nice little inside bear bar. Very nice. Bulls will be looking to accumulate underneath this. With an inside bear bar with a bull string like this, I mean, bulls are going to be looking for anything they can get. Now, knowing that bulls are going to be very anxious, are going to be looking to pick up underneath the previous bull bars, etc., and it's getting a little bit later in the morning at 10:40, it still would make a lot of sense for them to want to dip down to the 43.90s, but I think as early as this previous bull bar's low, or at least the one before that, is going to be where a lot of buyers start kind of stacking up. The one concern that I do have here is the earlier entry from the shorts that was at 96. If they're going to be looking to get out, as an example, if they were short from the beginning, they didn't take their profit down here, now they're underwater, chances are they're going to get out at break even, and that might disallow them from breaking down to a new low. We'll see, but it would be nice to at least get a new quick little pullback. Oh, golly, okay. So in terms of quick little pullback, that was quick but not very little. Jumbotron pullback all the way back down to the POC. This is where bulls are going to stack up and look at this and say, okay, is this potentially worth the risk given all of the context? Because buyers would have to re-up at around the 43.90s, and if we drag this a little further forward, we can see that the volume POC hasn't changed. It's the same spot. This closed underneath it. So a little bit of a concern in terms of the way that that formed, but remember the context. Sellers were looking for a new leg down, and they were massively disappointed. So this really quick flush back to a POC could be nothing more than just a break-even run back, right? All of those stuck traders slammed into it once they reached out to those objectives up here, using all of those buyers turning into sellers, taking profit, using that volume to their advantage to dump this thing all the way back down to get out of the rest at break-even, re-up a ton of them up here, and then just axe it out. So this move down, it's big, but it's kind of suspicious. This seems like they're reaching back to a major zone, and if they show enough bullishness here, it wouldn't be a surprise to see it jerk right back out of here. Now, it might be aggressive. It's a V bottom, and we just came off of that. But the fact that we missed the settlement price, we missed all those downside gap targets, and now we've got this giant bear bar when the bears just failed earlier, I'm going to have a hard time believing them if the bulls start showing back up too quickly. Not to mention, geez, yeah, and we're going into 1050 as well. So big washout, and bulls have an inside bull bar stacked right up on top of itself. It's a picture-perfect bounce off the POC. Buyers who are looking for continuation might have this inside bull bar, but again, from a scalper's perspective, I think it makes more sense to look for a wider stop, just to play with probabilities a bit more in your favor, and that would place objectives up in the 43.98 50s as it goes in towards the lunchtime session. We've got, wow, one nice bull bar all the way back up. Almost fills the objective for those scalpers. If their targets were below this bear bar, they would have been filled, and given the way that that is responding, I would almost assume that's the case. But if we go a little bit further, we've got another one. Let's see how they want to end up. Ooh, nice candle gapping. Going into 11 o'clock. Bull bars continuing back up. Bear bars back down. Okay. Another heavy bear bar back to the break-even point. Bulls defending it, bouncing back off. Bears back down to the break-even. If bulls got in on that bull move and they're seeing this break-even, they're not going to want to see it churn down very much. Now they're underwater a little bit. Back up. You can see the fist fight as they go into the lunchtime session. Look, it didn't go anywhere. Yikes. Before it drifted all the way back down. So very interesting in terms of the way that this all formed with a giant range, but a very good example of how we can still utilize this internal volume to give us a clue as to what the market is looking to do. Hopefully you found this useful, interesting, and entertaining, and something that you can add to your tool belt. And maybe there was a little nugget of info inside there that you'll find useful. If you have any questions, as always, feel free to drop those in the comments below. And if you have a more detailed question that needs some heavier answers, you can always send those to jhb@ssftg.com. Until the next one, enjoy, rest up, and we'll talk to y'all then. Thanks.